Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. I hope that you all had a phenomenal weekend. I know that I did. It's always good to step away from the screens when given the opportunity. So we do have a pretty loaded week this week as we head into mega cap tech earnings. We also have a loaded economic calendar. Of course, the highlight of the week is FOMC this Wednesday, the most anticipated FOMC ever, as it always seems to be anytime we're approaching FOMC. But that's besides the point. So there's a lot to talk about on this morning's show, and to do it, we have a loaded panel with us this morning. Good morning, Mander. Mander, good morning to you.
Good morning. Happy Monday. Yeah, loaded week we got ahead here, kind of like the Super Bowl of trading for all the catalysts we have coming up. So I'm excited. We'll cover that in Fed forecast coming up.
Speaking of the Super Bowl, it's only right that I congratulate you on the Birds win. Congrats, my man, as much as it pains me to say that.
Thank you. Exciting time to be in Philly. We'll see. Chiefs looked really good too, so I think we got a good game coming up.
Absolutely. I'd agree with that. All right, Diamond Trades, good morning to you.
What's going on, guys? Like you said, crazy week this week. Can't wait to get into it. We've got a lot to share with you guys today. Let's get after it.
Yes, sir. Ramsey Rippers, good morning.
What's up, guys? Good morning. Yeah, I mean, it kind of just seems like every week is the Super Bowl of trading. Like, there's always just economics, earnings, crazy. Yeah, what do we got? We got FOMC and massive earnings week. So yeah, let's go. Let's do it again.
Let's do it. Let's get it done. Stock Sniper.
Good morning. Yeah, this is going to be a huge week coming up. I hope to be a lot richer come Friday than I am right now.
And last but not least, Mo Mamba. What's up, Mo?
Good morning. What's up, brother? Hope everyone's doing well. Eagles, let's go. It's going to be an easy matchup. It's a bang Chiefs team, man. It's going to be a walk in the park. Let's get it this week.
Yeah, don't let that go unnoticed. Mo is a sneaky Birds fan over there in Houston.
Dude, I always forget. For like no real reason, I feel like, which makes it so much worse.
Who do you want me to vote for? I mean, come on. I mean, we're in Houston. We got the Texans, the Rockets. Texans won, 2-3 games this whole season? And then the Rockets. Let's not go there, man. Let's just get started with BTV, please. Let's have a good morning.
All right. Let's get into it here. So Fed forecast, economic outlook, earnings outlook, stacked week, boys. What do we got?
Yeah, this week is going to be pretty nuts on both the economic data front and then the earnings front. So let's start with the economic calendar for this week. Today is going to be pretty light. Dallas Manufacturing Index at 10:30. Tomorrow, we've got the Employment Cost Index, Case-Shiller home prices. Wednesday is really going to be the big day with JOLTS in the morning, and then the FOMC interest rate decision at 2 o'clock. Thursday, non-farm productivity and those initial weekly jobless claims. And then on Friday, we'll have unemployment and non-farm payrolls to sort of wrap up the week. So we're going to have quite a bit of data to come out this week. And like I mentioned, that real focal point is going to be FOMC on Wednesday. So the Fed is expected to increase interest rates on Wednesday by about 25 basis points or 0.25%, bringing the federal funds rate to 4.5% to 4.75%, right? And now, what is the Fed's problem, right? What is the issue here going into this FOMC meeting? It seems like we have a consensus on the size of the rate hike, but what are some things that we can look for the Fed to be debating in their meeting starting on Tuesday? So you have the first camp, which is that, you have this unemployment rate that is so low, which is normally a good thing, right? You don't want to see massive joblessness, but when you have unemployment rate, an unemployment rate that is this low, what can happen is you can get upward pressure on prices as wages increase to sort of compensate for this lack of labor supply. And so wages go up, which can push inflation higher, right? And we don't want to have a reflationary environment where inflation starts to creep back. It's already started to come down off of the peaks, and the Fed has done a good job at handling it. But we want that inflation to continue to come down. We don't want this really low unemployment to really spark that inflation again. And so what is too low, right? Based on the interest rate decision, based off of the interest rate and inflation projections from the Fed in December, they believe that the natural unemployment rate is about 4.8%, and we're currently sitting at 3.5%, right? And we're not even moving. We're not really heading towards that 4.8%. So important to keep that in mind. This view is going to argue for a tighter monetary policy approach going forward. Camp 2 is that much of this inflation is really just due to the supply chain constraints that we had during COVID. And those are just going to continue to dissipate as we've seen towards the end of 2022. Those are going to continue to dissipate into 2023. If you look at this chart that we'll actually see, we actually have this camp believes that we have some recent evidence of wage demand coming down. And so looking out into 2023, they don't believe that this sort of high wages and this wage growth is going to be a problem going forward, right? And so this camp is going to argue for a milder approach to monetary policy, as they believe that employment costs and average hourly earnings have sort of peaked, which you can see in the chart. So that's basically where we're at, and that's what the Fed is going to be debating. Do they want to go with a more restrictive policy going forward? I think that the general consensus is 25 basis points for this meeting, but what do they do next meeting, and how long do they keep rates in restrictive territory is really what they'll be debating at this meeting starting tomorrow and then ultimately concluding on Wednesday. Manor, what camp do you fall into of these two?
All right, well, I think it's important what camp I fall into isn't necessarily what's important, but I think there's truth in both, right? I think when we were sitting at 9.1% year-over-year inflation, a lot of that was supply side driven due to coming out of the pandemic and reopening businesses, honestly, to a stronger economy that we had going into the shutdown. And now you have all these bottlenecks in supply chains. That was really what I think got us to 9.1. We're clearly over the peak of that bell curve. And so as we come down, I think the fear is now moving forward with the low unemployment that you mentioned, right? If they were to pivot too early and they're looking forward on this, then that would put us in like a late 70s reflationary environment, which they've touched on many times is what they mostly want to avoid. Because if they over tighten and they send us into a mini recession here, they have easier tools to fix that than they would on a reflationary incident where they pivot too early and then they have to start from square one all over again. So I think the Fed has made it very resolute that they're currently sitting in camp 1. At least at the end of last year, that's exactly what they said in their 2023 outlook. And especially with jobless claims just coming in last week at 9-month lows, right? You said there are some data suggesting that with retail sales coming down, with ISM numbers pretty low, there is data suggesting that the demand side has been weakened. But I think until we really see that relationship show up, especially in the Phillips curve, which I'll cover next year, in that the unemployment to inflationary relationship, once that kind of confirms, maybe they're in a situation to start at least pausing before pivoting. But until that, I think with such a tight labor market, they're really fearful of pivoting too early. And so if we go to the Phillips curve here, this is like macro 101 for everyone here. This just shows the inverse relationship between inflation rate and unemployment rate. So obviously over the long or the short run, right? In the long run, at a natural unemployment rate, you're still going to have inflation going up. If you look over 30 years, you got to have a healthy unemployment rate of like 4%. For 30 years, you're still going to have inflation. It's not going to stay at the same price point. In the short run, though, you need unemployment to go up to bring inflation down. And so while we've seen inflation come down so far, thanks to the demand side shocks we saw, thanks to supply side openings, right? Helpful factors in that industry. Without that relationship showing in the Phillips curve, that is what they're fearful of. You want to see confluence through all of the different relationships. And so while demand side's going down to bring inflation down somewhat, that last 2% is going to be very sticky until you get unemployment to uptick at least to the natural rate, if not above it. We're still sitting like 1.5% under that natural rate of unemployment, which is really their fear there. And so what does that mean for stocks? Then we'll get right into earnings coming up, right? What that means for stocks so far, at least what we've seen in the earnings season so far, is horrible forward guidance for 2023 thanks to those factors. They're expecting unemployment to start increasing thanks to the Fed. That's ultimately what the Fed's hoping for. Consumer demand and retail sales going down. Businesses are now spending less in fears of that. So when you have companies like Amazon reporting this week, companies like Google, AMD, they're really at a position where they get affected from both consumer and business expenditure. And so Amazon with their cloud services, Google cloud services, AMD is one where they sell in the consumer side with chips on personal computers and their data center for storages. Those are a lot of companies I will be watching, especially after Microsoft and Intel last week. I think those are big watches for the economy and for the whole stock market. But on top of that, we have big names in XOM, Pfizer, Caterpillar, McDonald's, and then, of course, Apple and Meta as well. So really a massive jam-packed earnings week. So those are the ones I'm watching. What are you taking a look at here, Noah?
I mean, yeah, Apple, Amazon, Google on Thursday is going to be a day, right? Right after FOMC and then right into NFP on Friday. So this is going to be a pretty wild, week for the market. I think we should have a bit more clarity on the economic outlook going into the rest of the year once we get the FOMC on Wednesday and once we get some of the largest companies on earth reporting and giving guidance for this quarter and for the rest of the year. But that's going to wrap it up for us in Fed Forecast. We will pass it back to Alejandro.
Awesome, guys. Massive week ahead. I'm excited. I hope that all
Massive.
the listeners and the viewers are excited as well. All right, let's take a look at the system. So last week, there was some volatility, but in taking a look at the system chart, it really helps us to clarify things. So to close the week, we had an extremely strong bull trend, which, had I not been looking at this chart, I would have really not been able to trust, and I would have been skeptical. But luckily, I was trading using the system, break over the 50 SMA. I knew that was my signal to get long. Now, the reason I really like using this chart, even if I'm not necessarily in a trade, because nobody's perfect, I'm not going to catch every trade. I'm, of course, not going to catch every move. That's not even my goal. But this allows me to sort of define who's in control in the market, bears or bulls. Counter trend trading, there are a lot of traders who do that very successfully. Mo, who's one of our panelists, for example, bases his trading off of counter trend trading, and he does a really good job. If you're like me, you like to trade momentum, you like to trade with the trend. I've never found that the way my brain works that I'm good at picking tops or bottoms, okay? In my opinion, if you're not an extremely skilled trader, it's very difficult to pick a top, to pick a bottom. So using the system allows you to see, okay, we're trading above the 50 SMA, we're trading above the 10 SMA, clear momentum to the long side. I can pick my spots and trade long until that trade stops working. Or I can just take my profits and then look for the next trade, which would be the break below the 50 SMA, telling us that, okay, now bears are in control versus fighting the trend. Because what we saw a lot at the end of last week was a surprising rally. We got the break over the trend line dating back to January 2022, that downward daily trend line. And a lot of people getting trapped saying, this thing can't go higher, this thing can't go higher. Now, we may flip this week. We might get the break below the 50 SMA. The market sells off. But how many times did you try to go short on the way up, right? So this is why I like to use a system in order to trade with the momentum, pick my spots when I feel as though there's a shift in short-term market momentum, short-term market trends. So going into today, what is it that I'm looking for? We know that the market is down here in the pre-market. So what I'm watching is the 50 SMA and the 30-minute SPX chart, as well as on the 1 hour chart. So very simple here, guys. All I'm taking a look at is if we break down below the 50 SMA, that's again a shift from bulls being in control to bears being in control, and I would look for opportunities to short. We have the 50 SMA at around 4,000 SPX, which is even better. I love when things line up like that. We obviously know 4,000 SPX is going to be a major level because of psych reasons. And we have 40-30 SPX on the 30-minute chart. So this will present an interesting situation because it looks like we could break down below the 30-minute, but not yet be below that hourly. We, of course, want the two charts to be telling the same story. So it's going to be up to your discretion. Do I want to try to jump the gun here? Do I think there's a strong enough risk versus reward? If this comes later in the day, maybe those 50 SMAs are even closer to each other. Maybe this doesn't happen at all. The 50 SMA is in a strong uptrend. Maybe we bounce, we continue to rally higher. So that's what I'm going to be looking for going into this week. But for as far as I'm concerned, as long as we're trading above the 50 SMA, bulls are still in control, looking for opportunities to go long, and that trade has continued to work. So, don't fix it if it ain't broke. All right, guys. So that's it for the system. I'm going to pass it now to Ramsey Rippers for Bet the Bell.
Let's do it. Ryan, pull up the stats. We're going to get into the green or red question. So last week, if you guys remember or don't remember, I'll clarify for you. I believe so. Wednesday, the question, or maybe it was Monday, the question was, are we going to close over or under that trend line because we were moving so far in the pre-market? Green or red wasn't applicable. Everyone chose no by the end of the week. So everyone got a loss for that. We did close very nicely over that trend line. I'm looking at the chart right now. It's gorgeous. And then on Friday, everyone chose green, except Snipes wasn't on. Snipes, stop complaining, my man. It's there. It's there. All the proof we need. What's that face you're giving us?
First off, why are you telling me to stop complaining when I didn't even say a word?
Because I can see you. You're like
only keeping score on the ones that I'm wrong. And also, how do some people have 3 points and I only have 2?
Well, because you missed an episode. That's why we started keeping track again. Last week is when we started keeping track. But if you want, I can go back and I can rewatch everything because I know that these stats don't really speak volumes to who you are as far as the green or red choice. So I'll go back and we'll go back 3 weeks. That's what I'll do. I'll go for the last 9 episodes and update the stats. So you'll have some wins on the scoreboard. Anyways, yeah, everyone won on Friday. Snipes, you weren't here, so that's why you don't have 3 choices. But anyways, we're going to jump right into it. Indices, small gap down this morning, down a couple points. I'm looking a little bit under 1%. SPY down 0.7%. Qs respectively, about the same thing. Bigger earnings coming after the bell today. We had some report as well before. Alejandro, green or red today? What do you think?
I think today's going to be a green day. It just seems like a sort of back test day. A lot of bulls got trapped on that Friday squeeze. But I think bulls are still in control. I'd be surprised if they don't close it green today.
Snipe, what you got?
I got to go with Hondo as well. I'm going to go with green today.
Perfect. Noah?
I will go with green as well. I'm a bit hesitant, but I agree with Alejandro. I'm going to ride the trend.
All righty. Green.
The more people that say green, the less confident I get in my answer.
Well, I can tell you now, you can add a loss to Sniper, Hondo, and Diamond. It's going to be red. Sniper 0-3, brother. Come on, bro. You're just bragging undefeated. And
Just wait, bro. If we had 3-week stats, bro, I would be at the top. And anybody knows that.
Unfortunately, we don't, brother. It's life. 0-3, brother, coming up.
All right. We got one red from the Mamba. Mander, what do you think?
I'm in Mamba's camp too. I'm taking red. Hang Seng got destroyed down about 3%, I believe, right now. Yields are up. I'm going to take red as well.
All right, perfect. So we're going to get into our next question. So last week, I'm going to start asking a little bit more of these. I like the conversation. I like the dialogue and verbiage from you guys when we open the floor about these would you rather questions, right? So last week we spoke about Intel and AMD. I believe we also spoke about utilities and real estate as far as dividends, those REITs. So today we're going to talk about Tesla and Amazon. So a little bit of a backstory, I'm sure you all know, but for the viewers, last week Tesla reported their Q4 earnings, came in with the highest ever revenue, operating income, net income, and I believe they hit big on EPS and slightly on revenues. Amazon, on the other hand, they're reporting Wednesday at the close, or Thursday, I believe it's Thursday at the close, coming off of some pretty harsh earnings reports. As far as the stock's reaction over the last 4 or 5 earnings reports, they've only hit on revenues once. But for the future, if we talk about Tesla and Amazon, both of them increasingly uncertain future outlook. As far as Tesla, the demand and deliveries, not only production struggles, but also rapidly increasing competition in that EV market. And Amazon, they've just been plagued by internal struggles and macroeconomic this year. Just had a major round of layoffs, dismissed 10,000 corporate employees, shut down its new promising business models, Amazon Care, its healthcare startup, closed and canceled dozens of new warehouses. Reports also show that Alexa, I was super surprised to read this. Alexa, seen as it's one of the new bright prospects, they're losing $10 billion a year on Amazon Alexa. In the grand scheme of things, probably not too harsh, taking into account that they are one of the largest companies in the world. But I mean, 10 bill, that's a lot. The future looks very uncertain. So with that being said, what do you guys think? Would you rather own Amazon or Tesla? Alejandro, let's hear it. I know you're a big Tesla lover. I want to hear some thoughts.
Yeah. I think it's a pretty obvious answer for me. I think the viewers of the show know I really like Tesla at this point. I loved everything that you said regarding the earnings. The one thing that you didn't touch on, which I think is most exciting for me, is that Elon on the call, if you guys remember, the stock traded almost 5% higher in the aftermarket hours. He said that they might be able to produce 2 million cars this year. So you talked about production issues, and I think that that's something that a lot of other car companies are dealing with. And I talked about this last week. So we, of course, saw the Tesla price cuts. And what that means is that Tesla is just trying to get as many people as they can in Teslas and really grow that market share, which puts other car companies in a pretty sticky situation. Kia's CEO said that they would actually cut production before cutting prices. So other people in the EV space are definitely going to struggle trying to gain market share if Tesla continues at this pace. So I really like Tesla.
Gotcha. And you can't forget about, I mean, they did you and your dad pretty well. That nice 10 grand discount. I mean, the guy's got a beautiful Tesla.
That's a great marketing strategy, man.
Yeah.
They got some smart people over there.
Guy's got a beautiful Tesla sitting in the front yard, 10 G's off. Diamond, what do you think?
I'm gonna go with Amazon. I think when you look at the core business in the Amazon marketplace, obviously, and then when you look at their growth business in AWS and cloud, it really is one of the best businesses in the world, in my opinion. And I'm not to discredit Tesla. I think that everything that Alejandro said is accurate. I think that when you look at a name like Amazon, you can look at it and get a bit blinded and say, okay, well, this is sort of like one of your staple names. It's not going to have like a ton of growth in the future. It's just going to be like a dependable. And if you want to take risks, you should look at riskier names. But I think that, you'll be surprised to find that Amazon's going to have their hand in a lot of these next growth secular trends that we're going to see, whether it's in AI, whether it's in cloud, whatever it is, Amazon is really going to be probably on the forefront. So, I do feel comfortable picking Amazon here over Tesla. I think that I would rather own Amazon.
Gotcha. Mander.
Mine's a no-brainer here, and I think Honda made a lot of really good points. What Tesla has going for them as far as the price cuts is that they don't have dealerships, or they own the dealerships themselves, so they can afford to do price cuts, whereas you have a lot of these other automakers with private dealerships. So if whoever the last name is, like these families own the dealership, if they're buying the car from Ford at X price, they can't just cut the price like that. So Tesla's in a really cool position there, but as far as what Elon said, I take that with a grain of salt because he also said we're going to get the Tesla Semi by last year. He said we're going to get the Tesla Cybertruck by the end of last year. They said they were going to grow production by 50% last year. They haven't really hit on any of those marks. And really, it's just the valuation to me. So right now, I think the EV space is getting a lot more competitive. And right now, Tesla is valued at a 10x market cap to Ford while doing like 60% of the revenues as Ford. So I think they're just trading at too high of a multiple for me. Whereas I have Amazon with Amazon Prime getting into video streaming services. They bought Whole Foods. They have Amazon Fresh in grocery now. They're the leading cloud service with AWS. I think Amazon has a lot of things going for it when we get out of this secular trend. They're just getting really destroyed on the logistics and retail sales front, which is their core business model right now. But I think as we get out of that situation, I'd rather own Amazon here.
And last but not least, Stock Sniper.
Some great points brought up by everybody, but I'm going to have to pick Amazon. I think that's the much safer option of these two. With Tesla, I do see potential for it to make a larger return than Amazon could, but I do see a lot more risk. I personally think that 10 grand off and these price cuts, that's 10 grand less profit that Tesla's going to make on every single car. And also, just like Mandra was saying, where's the Cybertruck? Where's a lot of the things that Tesla's been planning? They're definitely falling behind on their projects. And one thing I also see that is a big risk for Tesla is they previously have had some major supply chain issues. And there's what's to say that they can't run into that in the future. Now, with Amazon, just like Mander was saying as well, I mean, they own Whole Foods. It's hard to not spend money on Amazon. I spend money to Amazon every single month. If you watch Thursday Night Football back in the season, you're giving money to Amazon. Amazon makes money from everything. So I'm going to have to go with Amazon.
All righty. I like it. Everyone made some pretty good points. We're going to go into our last question here, wrap it up real quick. I saw an interesting chain of tweets on Twitter on Friday. I thought that it would be a good conversation to discuss. So with that being said, what is one privately held company you wish that you guys could invest in? So for example, privately held company like Trader Joe's, State Farm, Publix, Airbnb, something like that. I want to hear one from each of you guys. Mo,
Airbnb's public.
Airbnb is definitely
You know
public.
the answers?
Oh, my bad, not Airbnb. I don't know why that came into mind. Airbnb. You can look up the stock name right there. Mo, what do you got?
So I did a little bit of research. I'm thinking Cargill, if I'm pronouncing it right, Cargill. It's the largest privately held global food corporation that produces and distributes their own products such as sugar, oil, chocolate, turkey, you name it, right? That company last year's revenue surged 23% to 165 billion. I mean, how can you not go with it? And it's the largest privately held corporation, and it's an international producer. So I have to go with Cargill on this one. Curious to see what the boys picked on this. Really interesting question, though.
Hondo.
God, Kevin Harris in the comments just took mine. But I got another one. Don't worry about it. First off, Chick-fil-A, I feel like is the no-brainer. Have you ever been to Chick-fil-A and there's not a massive line like literally out to the street? Chick-fil-A is a great one. Another one, because I came with a backup in case somebody took it. Discord. We use Discord every day. I think that Discord is a really interesting one. Their closest competitors maybe Slack. So they kind of have a monopoly in this like whole gaming community, trading, whatever it is, these like social chats. Last time I checked, the company was valued at about $15 billion. I think that they were actually set to IPO in Q4 of 2022. That obviously didn't happen. So maybe we see something this year, but Discord's pretty great.
Noah.
I thought somebody bought Discord. We'll check on that. But yeah, mine, I think the right answer is SpaceX. My personal answer is going to be Twitter, just because I think Twitter is far too important to the fabric of our society, and I would just love to own it. Like that would be so awesome. But I think the correct answer, like for valuation and financial reasons, would probably be SpaceX.
I had SpaceX too. I just typed it in that little chat. Snipe, what do you think?
I'm gonna have to go with OnlyFans. I was gonna say Chick-fil-A first, but I have to pick OnlyFans second because like there's people spending big money on there. I'm not really one of them, but I definitely have seen it.
Mander.
I'm getting destroyed here. I was gonna say Chick-fil-A, and then I was gonna say OnlyFans with Snipes. I mean, the margins on that just have to be crazy, right? From a financial standpoint. But I guess I'll go with I'm just gonna have to tail Snipes on that one. That my two that were my top were those two. I'll take Snipes with the OnlyFans here.
All righty. You guys heard it here. OnlyFans. It's the top private company pick for the Kane Capital team. That does it for Bet the Bell. Alejandro, back to you.
All right, sweet. Another great segment there. Let's now go to Mo for Mamba Market analysis.
All right. So SPY daily time frame here. Remember, guys, last BTB, let's just recap that real quick. We closed above the log scale trend line, indicative of further upside, right? We were saying breakout or fake out. We gave two scenarios of what would happen if this was bullish momentum, an actual breakout. What did we say? We would come up here and test this supply region, right? From 407.6 to 408.7, about a 1 point move, right? So we hit it, rejected it, and a nasty close. That's a bearish close. That's a hard rejection. I believe it was like the last 25, 30 minutes of market, had a nice pullback on the market. So we rejected pretty hard and closed bearish. So when you do see this, when you do see a hard rejection like that, that is a bearish close, you're expecting downside the next day. Could we gap up? Of course, right? But more than likely from what I've seen, usually you end up gapping down. You have a nice red day the next day. And that's what we're getting today. We have a nice gap down. Let's see if we close the day red. Big thing, two big things I'm looking out for is the trend line. Are we just going to come down, test the trend line and bounce off of it and come back and test this supply zone, right? I don't know if we're going to break through and hold or not, but if we do hold the trend line, I'm expecting a test back into the supply region to potentially break through and make new highs, right? Now, if we do come back within, where are we headed, right? If we do come back within the trend line, big area here, this 400.6 down to 400, I would say 0.3, this little region right there will be support. It will be support. I do expect a reaction on the daily off here. I do expect us to test it if we do come within the trend line, potentially test it, close, and then come back in and see if we can test the trend line. Big week. So really important, be really cautious out there with swinging. You see the big name earnings, FOMC and NFP this week. So huge week, Diamond and the boys were hitting on. So this week will be interesting on where we end up at the end of the week, at the end of this trading week. I will be looking out for that, and really how we come around this trend line after all these big earnings and these big events that are happening this week with the market. Again, let's see if we do hold the trend line. Two big things I'm watching out for: the trend line and then this level right here. All right, and then we'll take it day by day, candle by candle, and we'll go about it. Big week. Let's get it.
All right, beautiful. Massive week ahead. All right, so now to wrap up the show, we'll be doing a new segment introducing the first ever trade of the week.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
All right, so the first ever trade of the week goes to Money Mander. Mander, take it away.
Honored to be getting the initiatory one here, and that is a fire intro. So my trade of the week from last week was QQQ overnights with the Microsoft earnings. Really, this was just a gut play for me because I saw analysts were expecting a $2.30 EPS, which put where Microsoft was trading at like a 27-28 PE ratio, which to me was just way too high for the given environment we're in. And then obviously it helped when they came out with horrible forward guidance on pretty much everything. I listened to the earnings call. They said LinkedIn ad spend massively going to be down this year. Xbox, Azure was their cloud service was really their big driver that people were expecting continued growth in. That outperformed the rest of the business last year. They said horrible forward guidance there. Obviously, you guys saw how the Microsoft earnings played out. I think they opened up down 4%. So I just went with QQQ instead because the IV was juiced on Microsoft itself. Got out for 200% at the open before they ultimately ran 400% in the first hour of the trading session on Wednesday.
It's pretty crazy, too, that in the after hours, the initial reaction to the Microsoft earnings was actually positive. The market took took well to it, rather, and then massive reversal overnight. I didn't even know that you were in that trade at the time, so I couldn't imagine what you were feeling, like thinking you were down and out, and then next thing you know, you wake up to a 200% ripper. So congratulations there. Great trade.
Yeah, it was a
Let
funny
me say something
reaction.
real quick.
They had a double miss as well. They missed on revenues and unadjusted EPS, and it was up like 5%.
Yeah.
Real quick. How was that a fire intro, man? That's a Cowboys vibe intro. Mander, as an Eagles fan, that's just
Dude, what? It's
disrespectful,
Fox.
brother.
Nah, it's Fox's game of the week. It's
No,
Fox's
man.
game of the week. Always coming to you from a chilly Lambeau Field.
I don't know. If
Well,
it
that's
was
like
me, I don't know.
PTSD
But
or
that was a
something.
Cowboys vibe. Got the stars, the blue. Oh, come on, man.
Oh, if you win trade of the week, you can change it. How about that?
Thank you. Oh, for sure. For sure.
All right. Something to look forward to this week. All right, guys. It's 9:09, 20 minutes until the market opens. For those of you that don't know, the six of us plus Coach Dipka trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com to trade with us. This was a fun show to do. We hope that everybody enjoyed it. For those of you that are unaware, we are live Monday, Wednesday, and Friday mornings at 8:30 a.m. Eastern Time. So we will be back this Wednesday, and we hope that you all would join us once again. If you're watching on YouTube, do us a massive favor and like and subscribe. That helps out the channel a ton. But that's it from us, guys. Good luck trading today. manage risk, be smart, and let's rip it. Let's have an awesome week. Have a good one, everybody.